Hello and good evening, everybody. Welcome to tonight's live webinar. And before we start, maybe if you can hear me and see me, can you just type number 1 on the comment section so that I know that you are able to hear me? Yeah. Okay, welcome, Jatinder. All right, thank you, Ivan. Thank you, David. Thank you, Lim. So it looks like we are all set to go. Thank you, Jatinder. Right, thank you, TC Lily 47. Pekhar, Tung, Richard, Azrin, welcome. All right, awesome, guys. Once again, thank you so much for joining us tonight. So tonight we're basically going to talk about how you could use one of the, for me, one of the best trend indicators you can find in charts. And I'm basically going to explain to you why, right? And how you could actually apply this particular indicator and basically try to understand the trend and also try to make your own analysis on the trend. And the good thing about this particular indicator that I'm going to share in a short while is there's some forecasting element in there as well. All right, so today is going to be technical. So for those who learn about charts, then you'll be, you can reinforce what you actually learn about this indicator. Even if you do not have a charting knowledge, I hope that you will start looking at charts by applying this indicator. It's a very simple indicator to use, but I need to take some time to explain to you what this indicator is all about. All right, so tonight's topic once again is on understanding price trends. I'm going to bring you a journey on how what price trend is all about and how you identify them and how you could use the indicator to make your own trading decisions. All right. So tonight's webinar is also brought to you by Affin Huang Investment Bank or Affin Huang Capital. So you can actually use those charting tools on their platform as well. It's available on their platform. Okay, so if you're their client, you're able to basically apply what I'm going to share with you today. Okay. So let me just put up my slides. Okay. So I'm probably going to take about an hour or so. We'll try to do some current examples if we can, right? But bear in mind that today's presentation is for educational purposes only. It's not intended as any investment advice or whatsoever. I'm basically sharing you how to use a technical indicator to analyze price trends on the chart. All right. So if you want to look for investment advice, please do look for a licensed investment advisor. All right. Now, before I start, if you guys already know or have learned technical analysis before, I just need to know, you guys who are watching this session, if you have learned technical analysis before, can you just type TA on the comment section? TA. So for those who do not put in TA, that means assume that you guys do not have any knowledge on TA at all. Okay, Tung, thank you. Helen, I'm not sure why you didn't have the sound, but the rest of them are able to hear. So thank you, Jason. Yat Lau. Yeah, it could be your sound setting or something you have to check. Yeah. All right. Thank you, Arul. Thank you, Boon. Okay, so I guess some of you already have that knowledge, right? Michael Cheng, what is PE? I didn't say PE. What is PE? All right, awesome, Nyonya. Helen Chen. Okay, Azrin, Patrick, thank you. Oh, I guess you typed wrongly, Michael, right? Okay. Well, it's fantastic if you know TA. Of course, together with FA, you probably have a bigger view on the markets and also the fundamentals, right? But technical analysis is all about trying to understand price actions, right? And price action is basically formed from the market behavior themselves, right? Whenever someone or any buyer or seller make a trading decision, it will be reflected on the price chart. All right. So if you're able to understand the price movements and why they behaved in this manner, then we are basically able to understand a little bit about the market behavior. There is no foolproof, there is no 100% sure that we can actually fully understand. But we use these tools, right, to minimize our risk by understanding how the price behaves. All right. So hopefully by the end of today's session, you are, even if you don't have a technical analysis knowledge or price chart analysis, you should be able to use this particular indicator quite easily. All right. So and that's what I want to achieve today. Today's slides are also downloadable. So I will only share with you the link to download the slides at the end of the session. So please do stay with us until the end. Okay. So let us begin, right? I'm going to basically share a few parts here. We want to understand, first of all, price and, of course, the trend, right? We all know price does not move in a linear manner. It does not move straight. Like, if it goes up, it doesn't go up all the way. It will go up, it will go down. And the movement of price every single day or even every single second, every single transaction actually forms particular patterns, right? It forms different kind of patterns, and you can see these patterns form on the chart. All right. So why understanding a trend is important, right? And sometimes even if we know about the trend, it may not mean that this trend can actually go on. Like for example, so let's say we look at this particular price movement, right? And it's going up higher a little bit. And we decided to, let's say, buy over here because we think that this trend can continue, right? And if the price trend does continue, then it's fantastic. Then if you buy at this current level, the price trend just go up higher. Okay, if the price continues to trend, okay. But of course, there's also another way where the moment you buy, even the price trend is up. All right, if you look at historically and you look at the current price trend is up, but sometimes the price can also go down. Right, that means the price, instead of continuing its trend, it started to pull back and start to actually go down into a downtrend or even go sideways. Right, so it doesn't matter whether it's an uptrend or downtrend. Even in a downtrend like so, if you look at the price movement, it's going down, down, down. And let's say we try to catch the bottom, right? We want to buy when the prices are falling. And if let's say we are able to buy around these levels, if the price rebounds, then fantastic, right? But of course, there are times also when the price actually continue its downtrend movement. All right, because what we basically don't see is the future, right? On the charts, whatever that you look on a price chart, right? What you see are all history, right? The easiest part is actually to identify the trend. I mean, anybody can tell you whether it's going up or down, right? But the most difficult part, but the most important part is trying to identify the future trend. Okay, and that's why indicators are being developed, trying to figure out by looking at this indicator what could possibly be the next trend, whether it's a downtrend or uptrend. All right. So this is the $1 million question, right? The one that's on the right hand side of the chart, okay, which we don't see. We only see until the end, which is the current date, but we don't see what's going to happen in the future. Okay, so we need to look at a few indicators or patterns on the chart to at least give us a probability or a high probability that this trend can continue or this trend is going to reverse, right? So two things can only happen in a trend, right? Either, like for example, if you look at a bullish trend, either the trend is going to continue its bullish trend or it's going to reverse and turn into a downtrend, okay? Or it can also go sideways. So how do we identify a trend? Now, technical analysis is always definition, right? If the price, for example, has been going down and the price start to rebound today, one day only, that does not define an uptrend, because you need to have a trend, a series of price movements before you can actually identify them, right? Like for example, the bullish trend definition in technical analysis is when we have higher highs and higher lows. Okay, like I said, price don't move in a straight manner. It will go up, it will come down, it will go up and come down, and it will form what we call peaks, okay, temporary peaks over here, and the bottoms. All right, so if the highs or the peaks are getting higher and the highs are getting low, the lows are also getting higher, both of these peaks and bottoms have to move into a same direction. And if it's upwards, that means we have an uptrend. All right. If it's going downwards, then of course it's a downtrend. Okay, so like I said, this is the most easiest part. You can even ask a 5 or 6-year-old, what do you see, whether it's going up or down. They will basically tell you, right? Like I said, what the most important part is the right hand side of the chart. What is possibly going to happen in the future? All right. Now, there are also a time when price moves sideways. Okay, so when we have the highs and lows move into opposite direction, that means we have the highs basically represents resistance, or that's where it attracts most sellers, right? And the lows basically represents the support. So when we have a conflict between the support, the highs and the lows, we normally call it a correction, right? Or a consolidation, because there is no clear direction between the buyers and the sellers. Okay, so when both of them move into separate or opposite directions, then we have a sideways movement. Okay, there is no clear trend. So basically, three ways the price can move, right? The price can move into an uptrend, a downtrend, or a sideways trend. Okay, so that's trend, right? So we all know how to identify trend. That's the definition of a trend. But how do we use technical indicators to help us to identify trend? And this is what we're going to go next. All right. Any questions before I proceed? If there's no question, then I will proceed lah. Okay, I know there's a slight 8 to 10 seconds delay, so I probably have to wait about 8 to 10 seconds to see whether you have any questions. And if there are no questions, I'm just going to move on. All right. Yeah. From time to time, you'll also be receiving some polls, some question in front of your screen. Please do participate. Please do answer those polls so that we are able to communicate with you guys. All right. Okay, if you have any questions, you can just type it down. I will check these questions from time to time. Okay, but I'm just gonna go on. So trend indicators. One of the main indicator that we normally use to identify trend is called a moving average. Okay, this is like the mother of all trend indicators. In fact, most of the other indicators that are being developed are mostly based on the moving average usage. All right. So what does a moving average mean? All right. So if you look at the word average, I think you know what is average, right? Average is an average price or calculation for a set of data, right? For example, if you want to calculate data for the past 5 days, for example, and let's say we have a data set here of 8 days. Okay, the 8th day being the current day lah. All right. So if you want to calculate 5 days average, okay, I'll calculate the 5 days of data from day 8, which is today. So 1, 2, 3, 4, 5. That means from the 4th day, day 4 until day 8, you add all the data up for that 5 days. You divide by 5, and then you get the average price. If you're going to look at, let's say, day 7 average, then you take a look at day 7 plus day 6 plus day 5 plus day 4 plus day 3, 5 days. That 5 days of data, you add all those 5 days of data, you divide by 5, you get the average price for day 7. All right. So it is called moving because there is time, right? There will be new data in the future. For example, let's say tomorrow is day 9. And once we have day 9 data, we calculate again 5 days, including day 9. So day 9 plus 8 plus 7 plus 6 plus 5, right? You add up all the price data and you divide by 5, you get the current moving average price. All right. So every day or whenever there's a new data that comes in, it's being recalculated again. All right. So the average is called a moving average. All right. Now, why is this important? Okay, we all know what average price is. Okay, of course, I'm if you really want to go deeper into technical analysis, it gets more complicated than this. But I'm just trying to make it as easy to understand. All right. So average price is like even if you go, let's say right, if you go shopping now we do a lot of shopping on Lazada or Shopee or any other online e-commerce platform, right? We basically buy things online. Then when we want to buy a certain thing, right, what do we do first? Of course, we check whether the seller is reputable or not, but we also check the price, isn't it? All right. So you can actually look at a few sellers, okay, and some of the sellers have different prices. Okay, some is let's say you want to buy a mouse lah. All right, let's say you want to buy a mouse, same model mouse, and some of them are selling at 100 ringgit, some of them are selling at 110, some of them are selling at 90 cents, and so on and so forth. Okay, so you can actually find, let's say, all the sellers that sell the same product, this mouse. Okay, and then when you add up all their selling price and you divide by the number of sellers selling the same product, you get the average price. All right, and then you will basically just know, like, if this guy is, let's say, the average price is 100 ringgit. If this guy is selling at 1 ringgit and 10, that means you know that this guy is selling at a higher price, higher than the average price. And this guy is selling at 90 ringgit, then you know that this guy is selling at below the average price. Okay, but we also want to find out why they sell at those prices, isn't it? Okay, maybe this guy is selling 120 because maybe the shipping is free. Maybe this guy is more trusted. He has 5 stars. He has more credibility, right? That compared to the one that is selling at 90 ringgit. When you look at the comments, this guy doesn't do no service. They don't reply you. The shipping is late, and so on and so forth, right? So we make that kind of judgment. So at least when we have the average price, we know that when we buy a particular product, okay, are we buying at a high price or at a low price? Okay, but of course, average price changes. But here I'm just putting out a flat average price. Now, why do you think that people are willing to buy at higher prices? Right? Because they are bullish about this particular product. Okay, maybe this is limited edition, right? And they're willing to buy at higher price so that they are able to get the product. Okay, same thing with stocks, right? If the stock is really fundamentally strong, the demand is high, everybody wants to get hold of that particular stock. They cannot buy at below average, because if you want to buy at below average, you may not be able to get that stock. All right, you have to be willing to buy at higher prices. So the willingness of buyers to buy at higher prices, okay, in this case, stocks, for example, right? That means they are bullish that this price of this particular stock can go higher. That's why they are willing to buy at higher prices. So when prices are transacted above the average most of the time, it simply means that the price is bullish, right? The market or that particular stock is bullish because everybody wants to get hold of that particular stock. And price is continuously trading above the average. Okay. Now, if the price is trading below the average, it simply means that this product is not so hot, right? The demand is not there. They are not willing to buy at higher prices, but they are willing to buy at lower price than the average. Okay, so if those guys are only willing to buy at lower prices and below average prices, that basically means that the market now has an opinion that this product that we are buying is not worth higher than this average price. Okay, we're going to buy at lower prices. And if it continues to buy at lower prices, it simply means that the stock is particularly bearish. Okay, and markets are dynamic, right? Stocks don't stay bullish or bearish all the time. It depends on what we call a catalyst. Okay? It can be a positive or a bullish catalyst, or it can be a negative catalyst. For example, if let's say the stock has been going down, the reason why the stocks has been going down is because they have been reporting losses in their earnings, right? But at one time, then suddenly this quarter or this new quarter, you see that they have turned around. Okay, instead of making losses, they're starting to make profits. Okay, so that turnaround in profits, now they're starting to make money, is a positive catalyst, right? Or the catalyst can be in any form. It can be maybe that particular company has a bigger project, or sign an MOU. We always listen to all this kind of news, right? This company signed an MOU with another company, to supply this or that, or this company is now it's a possibility of merger, right? And so on and so forth. There are many different reasons, right? Or that particular stock or the company may be in a sector that is growing really strongly, right? It can be bullish, and of course, you can also have a bearish catalyst. All of these information that is available are basically affecting decisions, right? Like I said earlier, whatever decisions that traders or investors make, they are reflected on the price charts. All right. So simply said, if the price is continuously trading above the average price, then we have a bullish trend. And if it's continuously trading below the average price, then we have a bearish trend. All right. Now let's move on. So if you apply a moving average indicator, okay, it's a line, okay, because it connects all the data points, all the average prices for every single data. Okay, so we have the thing about moving average is a universal indicator, meaning that if you apply a moving average indicator, what kind of time frame are you looking at? Are you looking at a short-term time frame, or are you looking at the longer-term time frame? Okay, for example, if I'm using a 90-day moving average, so it calculates 90 days of average. Okay, I'm referring to daily charts lah. All right. If you apply a weekly chart and you put 90, it means 90 week average. And if you put an hourly chart, then it becomes a 90-hour average. Okay, so let's go back to a daily chart, all right? Because most of the examples that we will be using are daily charts. So 90 day is like how many months, right? And we are talking about trading days, okay, not the calendar days, right? Because we all know calendar days have 30 days. So even let's say we simply put it lah, right? You take 90 divide by 30, you get about 3, right? So it's like calculating 3 months of average price. Right. So if you're using, let's say, the 300-day moving average, that means you're calculating the 1 year average. Okay, so it gets, the higher you put in the parameter, okay, the number of days you want to calculate, the longer term you're trying to identify a trend. Okay, so it can be like 90 days, it can even be like 10 days. Now, depending on the trend that you are identifying. All right. So like in this case here, for example, the red line that you see there, that's considered a long-term downtrend. That's a 90-day moving average. Okay, and you can see the direction of the moving average has been going down. That means the average prices for the 90-day average or the long-term average has been declining every single day. Why? Because the price continues to trade below the average. There's a very short period of time when the price goes above the average, but then again, it went back below the average. So if the price stays most of the time, right, below the moving average will continue to decline. All right. Now you can also similarly look at the blue line on the chart. That blue line is basically a 10-day moving average. So it's a short-term average, because we are only calculating like a 2-week average, right? 5 trading days, right? So 2 weeks. So you look when the prices are falling. Okay, if it stays below the moving average, then of course the average price will continue to decline. Okay, so again, if the price is below the average, that means we have a downtrend. Okay, and the price can change direction, right? The price can change into an uptrend once the price goes above the average. All right, so as you can look at the direction of the moving average here, you have, even though in the long term the whole trend is down, because most of the time the prices is trading below the long-term downtrend. Okay, but in the short term, we can have short-term uptrends and downtrends. Okay, so we can have short-term period, we can longer term period, we can even have a super long-term period. Like for example, if I apply a 200-day moving average, right, that's going to be pretty long-term. All right. So here the only challenge here to use moving average is to apply an appropriate moving average for that particular stock, because every stock price movement behaves differently. All right, the movement in, let's say, blue chip counters or stocks that are in the KLCI component, for example. Okay, look at, let's say, Public Bank or Maybank or IOI Corp, KLK, all these big companies that's in the index. The movement is completely different from stocks that are below 1 ringgit. Okay, so there is no one moving average where you can apply across all stocks. You need to find the right way. Okay, so it's a little bit more difficult. And this is not the indicator that I want to share. I'm sharing you today, right? This is just the basics, because later on when we look at the other indicator I'm going to show you, it also evolves around the average. So I need to make sure that you understand the average first. All right. So if you look at the price movement, for example, let's say how do we use moving average? Now, this is how it's commonly used. All right. So if the price, which is represented by the black line, let's say that's the price, and the blue line is the moving average, for example. All right. So if we all know that if the price is below the moving average, that means it's a downtrend. And let's say we are assuming that we are investing or trading in Bursa Malaysia, where we cannot go short, so we do not want to make any decision to short the market, but we only want to make a decision to buy, to go long, all right? And we only make money when the price goes up. Okay, so in a downtrend, of course, if you only want to go long, we do not want to go against the trend. So let's say I do not want to make any decisions when the price is bearish because it's going down, all right? But what happens here, Salih, when the price starts to rebound and it starts to go up and it starts to go above the moving average? So it looks like at this point, right? We normally call it a crossover. Okay, a cross above an indicator, or it can be indicator against indicator crosses or whatsoever. But this is like a starting point, right? Like previously the trend was bearish, and now that the price has gone above the moving average, could this be a start of a bullish trend? All right, because now that the downtrend is probably over, right? Now the investors and the traders or the market players are now willing to buy prices above the average. So is this a sign that the trend is turning around? Okay, and let's say we make based on this indication. Okay, we make a trading decision to buy when the bearish trend starts to turn bullish. Okay, we do not want to wait until the price goes up higher and higher and higher, because as it goes higher, then we'll be buying a very high price lah. Okay, and then your potential profit gets lower as well if you buy at a high price. So normally as a trader, we always want to look for this reversal point, right? A reversal in trend in this example. So a bearish trend, when it starts to turn bullish, that's where I want to get in, right? So that if this trend really starts to turn into a bullish trend, then I can just ride on the trend. Okay, so let's say we make a decision here to buy, right? Let's say we want to enter the moment the trend reverses. Okay, and let's say the price starts to go up, so fantastic, right? And as long as the price stays above the moving average, it basically means that the market is bullish, right? Remember I told you the reason why the market players are willing to buy at higher prices is because they think that the market can go even higher. All right. What happens? Let's say the price starts to come down right now, and it's not being so bullish anymore because now the price is transacted below the average. And let's say I make a decision to sell over here. Okay, so this is a common way of using the moving average. And of course, if you go further, instead of using the price against the moving average, we also have actually two moving averages. All right, it's a dual moving average where we use. Because prices sometimes can be too whipsawed, right? Too jagged, it's too volatile. So we smooth it out with another moving average. But I do not want to go into that because that's again another story altogether. But basically, it's like that, right? Whether it's a dual moving average crossover or whether the price cross above or below the moving average, it basically signals a trend change. And we want to be part of the beginning of that trend change. All right. So if I'm going to go on further, if I were to look at, let's say, using the moving average. So let's say I study about moving average, right? And this is how we should be using it, for example. Okay, that means when the price cross above the moving average, let's say we buy because it's turning bullish. And when the price goes below the moving average, we sell because it's turning bearish. Okay, if I'm going to do that, and of course, this is just, drawings, right? But what happens if we really apply this? Okay, so this is an example of a chart, right? So if you look at number one over here, the signal arrow up there, okay, this is when the price starts to go above the moving average, right? It looks like the bearish trend is over, and we're probably going to see a bullish trend forming over here because now the price is being transacted above the average. Okay, so if you look at here, if let's say you make a decision to buy over here, then fantastic, you're able to ride on the trend. Okay, and then the price fell below the moving average. Okay, and of course, if I can see, okay, from that point, right, from the first arrow down, from that point, if I can see what's going to happen next, because at that point of time when we make a decision, we don't see that right hand side, right? We don't see what's going to happen, but now we can see, of course, lah, right? And if we can see, of course, I'll tell myself, I should not sell, isn't it? Because the price is not going down, it's just going sideways. Okay, but I cannot see. Okay, but at that point of time, I see that the price has gone below the average, and it looks like the trend is now turning its direction downwards. So let's say I have to sell, right? Because that's the indicator, that's the indication. So let's say we sell over here and the price goes down, so you feel, oh yeah, lucky I sold, right? And then about a week later, the price goes up back above the moving average, which comes to the point number 2. Okay, and that say, oh, it looks like the price is trending upwards again, right? Probably time to buy again. Okay, and let's say we buy over here, the price goes up a little bit, and then after that it comes down back again. Okay, at number 3, you see there's, the price fell below the moving average, and you say, okay, I have to sell again, right? Because if I don't sell, what happens if the trend really start to go down? So I better sell, right? And the moment I sell, after about a few days later, number 3, the price goes above the moving average again. Okay, and you can see it like 3, 4, 5, it repeats, right? And you find that the price, when it goes sideways, right? When it goes sideways, it tends to cut the moving average very frequently, because it's like going up in 1 week, but the next week goes down back again. In 1 week, it goes back up again and goes down back again. We call this a whipsaw. All right, and this is every trader's nightmare. All right, because when the price rebounds, it looks like it's going up, it looks like it's going to go up, but when we buy, it starts to come down. Because generally there's no direction, the market is going sideways. All right, so we will have a series of losses, and let's say I've applied this indicator to buy and sell. All right, I've applied this to buy and sell. I say that I can trade number 1, I probably make some money because I can buy at the bottom number 1 here and sell at the first down red arrow. Number 2, I could possibly make some money, all right, because I'll be buying at number 2 and then sell near number 3. Number 3, number 4, number 5, number 6, definitely I can't make money. I will lose some money over here. All right. And now if you look at, this is where the challenge is, right? So now you see that the previous trend was going down, because that's the last arrow down that you see there on the chart, right? It goes down, but it started to rebound again. Okay, and it's now trading above the moving average. And this is exactly where we make our trading decision. Should I buy here? Should this be the trade number 7? Okay, and this will be a challenge. Why? Because now I can't see the right-hand side of the chart, because this is where the risk is. Okay, what happens if I buy? Okay, right now, based on this indicator, right, it goes above the moving average. I think that the trend is going up. And if, let's say, I buy over here, what happens if it repeats again, like what happened in number 3, number 4, number 5, or number 6, right, where I don't make money? But there's also a possibility of number 1 and number 2, where the price can really trend upwards. All right. So how do I make a decision here? So I just wait. Okay. And of course, again, in technical analysis, there are many ways to actually catch a bull. All right. But here I'm just basically playing with the idea of making a decision during those trend reversals, because once we understand this, then once we have identified that problem, okay, and for every trend indicator, you normally have this problem. When the market goes sideways, that's where you get a lot of bad signals. All right. During trending market, no problem, because it trends, the price will continues to stay above that moving average, so you just ride on the trend. Or even with a downtrend, right, the price will continue to stay below the moving average, so you just ride on the downtrend. The only problem is here, this sideways movement. Okay, and if I make a decision right now at the current price, if you look at the chart here, I do not know whether this sideways is going to prolong. Right, at the moment, if I just use this indicator, right, if I just use a moving average indicator alone, I do not know whether this is going to prolong. That means this is going to continue to be a sideways trend, or is it going to go into an uptrend? I do not know yet, because the indicator does not give me any of these indication. All right. Now that goes to the second part, right? There's another thing that we have to understand about trend. Okay, there's another characteristics that we know about trend. And before I go even to this topic here, this part over here, and you know, the, once we have identified the problem in moving average, of course, traders and analysts, they will try to find other ways to identify the future, right? There are forecasting tools. So moving average does not have a forecasting element there. All right, but you can have forecasting element like if I'm sure some of you guys probably heard about like Elliott wave, right? Because if you are able to identify the wave, right, correctly, then we could possibly know what's the next wave, whether it's going to be a trending wave or whether it's going to be a correction wave or sideways movement, right? That's a reason why we can take up a step further in technical analysis to learn forecasting tools. All right, but you know those methods are very difficult to understand because they are rule based. You know, when you dig deeper into Elliott wave, if you are not strong enough in your technical analysis, you'll just go into the rabbit hole and you will not be able to come out now. All right, because the subject matter is deep. All right. Okay, so before I go, I also want to look at some of your questions. Rebecca is asking how many days moving average is ideal. No, there's no ideal moving average. You have to basically test this on any counter that you look at. Okay, there's a way to do it, right? Because this is not the discussion on moving average, because I'm gonna basically share with you a better indicator, a much more easier indicator to use. All right, instead of the moving average. That's the problem with the moving average, right? Because it's a universal indicator. I do not know, like what Rebecca is saying, how many days moving average should I apply, right? So we want to solve that problem and make it easy, right? And trading has to be easy lah. Okay. Rasmavi is asking a difference between MA and EMA. MA, I'm assuming is simple moving average, and EMA, I'm assuming is exponential moving average. Okay, the calculation is different. Okay, of course, the MA, the simple moving average, is just like you just add up all the data and then you divide by the number of days that you want to calculate, right? It's a simple average calculation. Okay, and there are many ways to calculate an average. Again, exponential moving average is one of them. Okay, so what exponential moving average does is that every weight will have every data, like today, yesterday, and the day before, and so on. Every day will have a different weight. Okay, and if you look at the exponential moving average calculation, you can just go and Google exponential moving average and it tell you how it's calculated, right? You'll see that calculation actually gives more weight to the current data. Okay, so today's data is actually more important than yesterday's data, and yesterday's data is more important than the data 2 days ago. Okay, so the data is more weight. All right. So when you apply an exponential moving average, you'll find that the price is closer to the moving average is closer to the price. All right, and it's more agile than the simple moving average, especially when we look at a longer term one. Okay, I do not want to explain further because I still got a lot more to do from here. We're only like halfway through, right? Because I'm going to introduce you another indicator that's easier to use. Santek says there's no best MA, you just got to suit it in your chart. Yeah, because why? Because you want to find those trends based on the price movement of that particular counter. And every counter moves differently, right? So you need to find, and it's not easy. Okay, it requires a lot of practice. The last slides ones are using 90 days average. Yes, 90 days moving average. Jason, what is TMA? Like I said, there are many ways, right? There's triangular moving average. There's you want to go deeper. There's also a Fibonacci where they use different weightage calculation. All right. So triangular, also same thing, right? It gives different weight for data. Okay. Apart from the simple moving average, we have many different kind of ways to do the weightage. All right. How do you weight every single data? So there's triangular, there's Fibonacci. There is there's even volume weighted moving average. All right, it includes a volume as well to calculate the average. So many ways to calculate the average. Okay. But again, this is not the top. This is not the indicator that I'm going to leave you with. All right, because this, like I said, the moving average is the mother of all indicators, and whatever indicators that's being done again goes back to this understanding of the application of moving average. All right. So if you're able to understand the trend just by using moving average alone, fantastic. All right. But if you want to get something that's simpler, that's where we're going to go. That's where I want to share with you. All right. Which is the next indicator. Now, one of the other thing is also to look at the trend momentum, the rate of change. How strong is that particular trend? Okay, if you look at this movement here, right, and you can see that the highs are getting higher, the lows are also getting higher, right? So that's as long as the highs are getting higher, the lows are getting higher, we have an uptrend. You want to agree? Okay, but what's the difference between the movements here? Okay, so if you look at this part over here, for example, the first few upward movements are very strong. Okay, the price moves up quite strongly, but after some time, the trend is still going up. The prices are still going higher and higher, but it's now going at a lower pace. Okay, and you can identify. You can look at this most of the charts, right? Like for example, if you were monitoring the market last year, okay, you can see last year was a crazy year, right? After March, April, after our first lockdown, okay, the market just rebounded, and you can see very strong movement. But when it goes towards the end of the year, you can see it's slowing down, right? Now, what this means is that the green area that we see here, the first few upward movements, okay, we call it an impulse movement. It's a very strong movement. Okay. Now, why price is able to go up so fast, so strong, so much is because there is not much resistance, right? The sellers are not selling. Why do you want to sell, right? So when you buy, when there's not much sellers waiting to sell, the price can go up easily. But as the price gets higher, even those who bought earlier now probably wanting to sell because they want to take profits. So as the price gets higher, the movement of that trend gets heavier. Why? Because there are more selling pressure. Okay, so in a particular trend, there are times when the momentum is strong, and there are times when the momentum is weak. Okay, so the whole period here, the trend is still a bullish trend. It is still an uptrend. The only difference is the earlier period, right? The first area, the first box that you see there, the trend momentum is strong. The second area, the trend momentum is weak. All right, because if I'm able to see that the trend momentum is weak, then if the momentum is weak, it simply means that there's a lot of sellers coming in right now, and we're probably going to expect a correction between the buyers and sellers. We're not going to expect the bullish trend to continue getting higher anymore at the moment, okay, until the correction is done, until the sellers have satisfied selling. I think they're normal sellers, then we can see price moving higher. Okay, but if the selling pressure continues to be stronger than the buying strength, then the trend could turn bearish. Okay, so when the momentum is getting weaker, this is where we have to get ready, be more alert. All right, we have to be more alert. Why? Because the price can change its direction because it's getting weaker already. Okay, so the moving average, like I said, you can use the moving average to identify momentum. I'm just going to show you in a short while. All right, so if you look at this movement, all right, this is the same chart that we looked at earlier. You can see we just take a look at two lines first. All right, or in fact any of the line. I'm just going to use one of the lines first. You take a look at the red line. All right, if you take a look at the red line, now you see that this movement upwards, okay, the first one was quite strong, and you can see the difference of how it moves away from the moving average. This first arrow up, right, you can see the distance is quite far from the moving average. It means very strong, isn't it? That means they are willing to buy prices way higher than the average price. Okay, then you can see the second movement. You'll see that the momentum is still strong, it's still quite good, but it's not as strong as the previous one. You can see that the distance now gets smaller. Okay, and if you compare the third one, it gets even smaller. What does it tell you? So the trend is still bullish, right? You can look at this whole movement here. The prices, the black line is still above the red line, is still above the moving average. The only difference is as the price moves towards the right or near the current prices, the momentum is getting weaker. All right. Then now the other thing you can do is basically, because price is volatile, it can move up and down. We can actually replace the price with another shorter term moving average. Basically, the application is the same now. All right. We are just looking at the distance again between the red and the blue one. Okay, it can be any short-term moving average, right? It doesn't matter. Okay, so if you look at the distance between the two moving averages, right? Now, the short-term average will move faster than the long-term average, right? Because it's short-term average calculation. The long-term average takes a longer time to change direction because the data is huge, right? So we call it a fast-moving average. The shorter-term one is called a fast-moving average. Then we have a slow-moving average for long-term one. Okay. So if you look at the application, it's the same. You see that at the beginning, when the blue line goes way above its moving average, the red one, the main one, you can see that the distance or the spread gets bigger and bigger and bigger, right? But at one point of time, you'll see that the spread, okay, or the distance or the difference between the moving average, although it's still going up, but it's getting smaller. All right. So basically, when two moving averages, right, one has to be shorter term, one has to be longer term. If they are expanding, that means if the difference gets bigger, that means the momentum is getting stronger and stronger. All right. If the moving averages are getting thinner, then the moving average is basically, or the momentum is getting weaker. All right. Now, why this is important? Because as the trend gets weak, okay, we're going to expect a sideways correction. All right. Because previously there were no selling pressure, but now the selling pressure is starting to come in, and therefore we're going to expect a correction. All right. So that's the moving average. All right. So instead of just looking at the direction, you can also look at the momentum of that direction, whether it's weak or stronger. All right. So now, of all these, of course, can be represented by one indicator. I know for me, so far, right, I find this to be the ultimate trend indicator, right? Because number one, is simple to use, and number two, it's simple to use, right? Number two, it has this forecasting element in there as well, which I'm going to share with you. Okay. So this indicator is called the Ichimoku Kinko Hyo. All right. I'm not sure whether I pronounce it correctly because this is a Japanese indicator, right? And this indicator is being used in 1930, okay, by this guy called Goichi Hosoda. And at that point of time, of course, in 1930, right, 1940 or whatever, we don't have computers, right? You probably just have a ledger or a spreadsheet, but it's a paper, a physical ledger, right? So and traders, I mean, Japanese traders have been trading like more than 400, 500 years. Okay. Of course, the way they trade 400, 500 years ago is different. They don't use charts and all that, right? So this guy is data driven, right? He wants to use data to make decision. Okay. So at that point of time, there's no charting tool, right? So all he has is this particular paper where he write numbers. Okay. So he want to actually create a spreadsheet of numbers. Okay, and when he see the numbers, he can basically visualize a chart. That's why it's called an instant view of a balance chart, right? The one look at the numbers is like, when you look at when you watch the movie Matrix, right? When you see the numbers, it actually represents something. So when he look at the spreadsheet, it represents something. All right, he can basically visualize the chart. Okay, is the work his work is published in 1969, but of course it's in Japanese, right? And that's the reason why we will only introduce this particular indicator only in the past 15 years, right? When somebody translated his work, then only we got to find out this indicator. All right. So that's 1930. So what data is he looking for right now? So when you apply this indicator, it looks complicated. All right, because there'll be quite a bunch of lines that's going to be plotted on the chart. All right. But like I said, if you know how to use this, then it's going to be very easy. Okay. Later, I'm just going to show you only need one line. Now, the first data he needs is called a standard line. Okay. So if you look at this average, this calculation here is the highest high plus the lowest low divided by 2 over the period of 9 days or 9 period of data. This is the simplest way to calculate average. Okay, remember, this guy doesn't have a computer, probably no calculator as well. All right, so he has to have a simple way of calculating. Right? Imagine if you want to calculate 9-day average, you have to go and calculate and add all the 9 days and you divide by 9. Right? So instead of doing that, you just look at the highest high and the lowest low for the past 9 days, divide by 2. You get the middle, right? So that's the average for him. So basically, if you look at this indicator, right, the first line is a 9-day average. Right? That's the first line, called a standard line. And then he have a 26-day moving average, a 26-day average. right? That's the turning line. So again, he has this two line. Why he used this two line, I will explain further, later. Is because remember I told you about the distance between the two moving averages to tell you about the momentum of that particular trend, whether it's weak or strong. Okay, so he used this data as well. All right. So the first line, 9 days, second line, 26 days. And then he has this following line. Okay. We call it the preceding span A. And of course, you read other resources, other books, they name it differently. But this is where I got the information from. We call it a preceding line. Why is it called preceding? Because if you calculate the data today, it is not plotted today. It's going to be plotted 26 days to the front. Okay. That's where the forecasting element is. All right. So the first span is basically the average between the two lines. Okay, so you take the standard line plus the turning line, you divide by 2, right? This is the average between these two lines, and it's plotted 26 days to the front. Okay, and then he also wants to have a longer term view, a little bit more longer term view. All right, that's where we get this preceding span B. Okay, this is the average over the past 52 days. It's like a 52-day average. Again, this is also a preceding span, a preceding line. So it's a 52-day average, but plotted 26 days to the front. All right. And then we have the cloud, right? The cloud is the area. The cloud is not a line, it's just the area between A and B, span A and span B. Okay. And then we have the delayed line. Okay, the delayed line is basically today's closing price, but it's plotted 26 days ago. Now, why he has to have this Chico or this delayed line is because, again, this guy look at a spreadsheet, right? At any data point, he will basically try to identify what could possibly be the next price movement, future price movement, and immediately he also know what's the price 26 days ago. All right. So there's just too many numbers on the chart, right? But he needs these numbers because he was looking at a spreadsheet and not a chart. All right. So some of these lines are basically, you don't really need to use it, lah. Okay. Now, so when you apply this chart, this is how it looks like, right? We have the standard line and the turning line that looks like a moving average, but it's not as smooth as the moving average because this is a very simple way of calculating the the average. All right. So we have the blue line and the red line that represents the standard and turning line, because the one that's closer to the price is the standard one. The shorter term average is always closer to the price. The bigger number you put in a moving average calculation, it goes way away from the price. All right. So you have the standard line, blue line, the turning line, the red line, and then we have the cloud. And you can see that when you apply this particular indicator, the data stops here. Okay. But the line, but the preceding span A and span B continues to move forward until the next 26 trading days. Okay, 26 days to the front. That's why you see this cloud moving forward. All right. And then these dotted lines, this is the turning the delayed line. Okay, it's basically today's closing price, right? Which is today's closing price right now, but it's plotted 26 days ago. All right. So for me, number one, the delayed line is basically useless. We don't need them anymore because we by looking at the chart, we can actually see what's going to happen, moving forward and also backward, all right, historically or towards the future. So we don't really need the delayed line. Okay. So do we also need the other two lines? Because there are only 3 lines left, right? The cloud, which is basically the area between span A and span B, and the standard and turning line. All right. So the application is this, right? Same thing. Okay. Remember, we talked about moving average. Okay, so when the price goes above the moving average, is an uptrend. It goes below the moving average, is a downtrend. So in this case, the price turns in an uptrend when the standard line goes above the turning line. Okay, that's an uptrend. All right. And if the price goes, let's say the standard line, okay, the standard line, the short-term average cross below the long-term average or the turning line, then we have a downtrend. So the application here is almost similar to the moving average, right? But the only difference is this: regardless of whether the standard line cross above or below the turning line, the confirmation is still comes from the cloud. Okay, and remember, the cloud is a derivative from the standard and turning line because it all start back from the standard and turning line. Right? So if let's say we have the standard line crossing above the turning line, but it is still below the cloud, then it is still not a confirmed uptrend. Okay, the uptrend is confirmed only when the price is above the cloud. Same thing with the downtrend, right? If the price is below the cloud, then it's a downtrend. Okay, so basically, if you look at this indicator, the only thing that we need is the cloud. All right, is the cloud. Yeah, and very simple, right? If by application, you just put in the indicator, the cloud indicator. You just want to see where the current price is. Is the price above or below the cloud? Right? If it's above the cloud, that means it's bullish. Right? If it's below the cloud, that means it's bearish. Okay. So let me ask you a question right now. Okay, since now I've already explained to you moving average, the Ichimoku indicator. You can ask your questions if you want to. All right. We're almost coming to an end, so you can pose the questions. But before you pose the questions, you may want to answer my question here, right? So if you look at the price, you look at currently. I don't need to look at historically because historically it's already done, right? But you look at the current data, simply, what trend is this? Is this an uptrend or a downtrend? Okay, you guys can type it in if you want. Uptrend or downtrend? Okay, Michael is down. Anyone else want to try? Downtrend. Okay, downtrend. Quite simple, isn't it? The price is below the cloud, right? Now, why this guy call it a cloud? Okay, basically, if you look at let's say we are in a storm right now, right? In a storm, and if you are, let's say you're flying in an aeroplane, and if you are below the cloud, you basically go through turbulence. It's not a good experience, right? Your plane will go shaky because you're under a storm. Okay, but if the plane, okay, goes above the cloud, and once it goes above the cloud, the storm is not there anymore. So everything is clear, right? Everything is good. Your plane is more stable. So if it goes above the cloud, that means everything is nice and steady. If it goes below the cloud, danger, right? And if the price goes in the cloud, that means it's uncertain. You can't see. All right. So that's why you call it a cloud. Okay. So at the moment, I just want to basically, you just have to do the first thing. The first thing that you want to know, okay, is whether the price is above or below the cloud, whether it's uptrend or bearish trend. Because after this, we're going to go further. All right. Like some of you asking, what's the color of the cloud for? You need to see the complete cloud on the right. Yes, because that's the next part. Okay, the first part is the trend. Okay, you have to identify the trend first. Then only we'll try to identify the strength of the trend. Okay, remember I told you about the second characteristics, right? So we want to know the strength of the trend as well. Okay, so this is easy. This is the easiest part. All right. Now, for Ichimoku, for this particular indicator, I'm just going to call it a cloud. All right. So bullish trend means price above the cloud. Bearish trend means price below the cloud. Okay. Now we take a look at the strength of the particular trend. Okay. So now, when we have thicker cloud, all right, if the cloud gets thicker, it means that the trend is strong. It can be bullish or bearish, all right? It depends on where the price is above or below the cloud. So if the price is above the cloud and the cloud is thick, that means you have a strong bullish trend. All right. Okay. But if the cloud gets thinner, it means that the trend is weak. Okay. And remember, this cloud is being plotted forward, so we can actually try to figure out what could possibly be the trend moving forward, at least in the next 26 days, to know whether the trend is going to be weak or strong. All right. And so what this guy is trying to do is, he used all this calculation. The fundamental, the foundation is the moving average, right? The 9-day and 26-day moving average. And then what he does is he look at the relationship between the 9-day and 26-day moving average, and also another, a longer term one, which is a 52-day moving average. The relationship between this average, whether it's expanding or not, and you look at this relationship, okay, on a current price movement to determine what could possibly be happening next. All right, so he's trying to identify current price movement and try to figure out what could possibly be the next direction. Okay, so that's where the cloud plays in. All right. So if you look at this particular analysis, so the number one, the trend can be either bullish or bearish. All right. Number two, this bearish trend can be either strong or weak. Okay, like for example, right? So what does a strong bullish trend means? Okay, so number one, bullish means price have to be above the cloud, and what? Right? So strong means the cloud has to be expanding. Okay, so price remains above the cloud and the cloud is expanding. That's a strong bullish trend. A weak bullish trend is when the price still is above the cloud because it's bullish, but the cloud is getting narrower. Okay. Now, same thing when we go to the bearish trend. A strong bearish trend means the price is below because it's bearish. The price is below the cloud and the cloud is expanding. Okay, then we have a strong bearish trend. Okay, if the price is below the cloud and but the cloud is getting narrow, that means that trend is weak. Okay, so this is basically what we need to know. All right, and like I said, the good thing is this particular cloud indicator is being plotted moving forward. All right. So like here, for example, okay, so if you look at this current trend here. Now we all know that the trend is bullish, right? It's above the cloud. And if you look at the cloud direction, is going up and it's expanding. So that means we are now currently in a very strong bullish trend. Okay, and if you look at the direction of the cloud moving forward, it's going upward. So we're going to expect the trend to continue going higher. Right, because it's a strong trend, right? We expect we are not expecting a correction yet because it's not weak, right? It's strong. Okay, so we are going to expect the price to continue going higher and possibly make a new high as long as the price stays above the cloud. Right, it has to be above the cloud to remain bullish, right? Because sometimes we have a thick cloud, but if the price falls below the thick cloud, it simply means now that the trend has turned bearish. Okay, and we're going to expect a strong bearish movement because the cloud is thick. So just then don't just look at one element. You have to look at both elements together. Okay, and I always get this a lot of questions about this because some people get sometimes confused with this. Okay, but now we try to do examples, right? So now, okay, this is where I'm going to pose you guys questions, right? See whether you are able to get this. But of course, you have to continue to practice to make this more easier for you to use, lah. All right. So if you look at the current trend right now, okay, for this particular stock, okay, obviously it's a downtrend, right? Simply because it's below the cloud. Okay, but right now the price is now near the cloud. Okay, you look at the price now, it's near the cloud, and you can see that the cloud is actually expanding, moving downwards. So if I want to look at the current price movement, how will I interpret this particular trend? Anyone want to try? Yep, thick cloud. Somebody says thick cloud, right? But how would you interpret this? Because what I want is now, because what we want to do now, right, is to basically try to figure out the direction in the future. Okay, this is where we're going to plot the direction, right? So based on this cloud, how could we plot? And sometimes the direction that we were expecting, it could possibly be plan B also, right? It could be an alternate direction, an alternative. We may have a main indication, but we may also have an alternate analysis, okay, depending on where the price is going to move next. Okay, so Patrick says it's going down. Okay, Tan says thick cloud. Okay, so is going down the only. Yeah, so we are seeing strong resistance, right? Okay, strong resistance when? Okay, that's the question, right? Changing from uptrend to downtrend, it's already in a downtrend, right? The moment the price goes below the cloud is already in a downtrend. Sideways, downward bias. Oh, we want to go into further detail, right? It's going sideways and downward bias. Okay, Ken, am I just keep it coming? Because I'm going to show you how you use that future trend, all right, that future cloud. Downtrend with retracement possibly resisted by Kumo. Okay, yes. Okay, that's a good point. Ken, downtrend, because it is still a downtrend, right? And the cloud is like a resistance. You are quite correct as well. Wait for next signal. Okay, Michael, what signal do we want to wait some more? Shankar says down, is going down. All right. Thank you guys for participating. Is learning will be better if you guys participate as well, right? All right. Any more? Okay. Resistance to move up. Yeah, there is resistance to move up because right now we are in a downtrend, right? It is in a downtrend. So the thing is that, can this turn into a bullish trend or should it go down some more? Yeah, that's the question. Can this turn into a bullish trend or it should go down some more? Yeah, continue going up. That's what Rasmavi says. Okay. Breakout. Okay. So it means you want to wait for the breakout first, is it, Calvin? Okay, possible. All right, fantastic. Any more? Just follow above cloud buy. Okay. I think it will go up. Okay. Down close cloud is red. Okay. Reversal signal, wait for price to go above the cloud. Okay, that's what Liang Sun is saying. Okay. Awesome. Thank you so much, guys. So let me just, okay, this is how I would interpret it, right? Again, technical analysis or whatever analysis method, there is no right or wrong. Okay. Of course, you have to continue to do all this kind of analysis so that over time you are able to improve. Right? Because we want to know how these indicators are actually affecting price movements, and that can only be done if you do more examples. Okay. So so basically this is how I interpret it, right? So if you look at this chart right now, it is at the cloud. It is still below the cloud, right? But it is at the cloud, and it is currently at a very thin cloud. All right. The thing, remember, if the cloud is thin, that means the trend is weak, right? The downtrend currently is weak. Okay. Now, but if you look at moving forward, it's getting thicker, right? But at the moment, it's getting weak. So in a weak downtrend, the price can easily change direction because it's weak. It may turn into an uptrend. Okay. Now, how do I know, okay, whether this trend can continue going down or getting higher? So like some of you say, wait for confirmation. So what would be the confirmation, right? So for me is this. Now, the interpretation, the analysis is still the same. The application is still the same. As long as the price stays below the cloud, it's a downtrend. Okay, that's one. If it goes above the cloud, that means it's an uptrend. Simple, right? Okay. So now, if the price, let's say, if it's unable to break above or go above the cloud, because it is right now just slightly below the cloud, and it may break above it, right? Now, if it breaks above the cloud, okay, let's say the next few days lah. If it breaks above the cloud, what does it tell you? Number one, it tells you that the trend has turned bullish. It's not bearish anymore. It is now turned bullish. Okay. So assuming that right now the price is above the cloud, and moving forward, the cloud gets thicker, meaning that if the price stays above the cloud, all right, this trend is going to be strong upwards. Okay. That's one possibility. Okay, so I need to wait for the next few days, right, and see whether the price is above the cloud. So for those who said that you have to wait for the price to go above the cloud, that's a good answer, right? Because right now it is still bearish. Okay. Now, what happens if, let's say, the second scenario is the price is unable to break above the cloud? We have a rebound here, but it cannot break above the cloud, and then it starts to go down and it starts to stay below the cloud. If that happens, then we're going to expect a strong downward trend. Okay, the fact that it failed to break above that resistance shows that there is no confidence and the price may continue to fall, and it's going to fall even bigger. All right. Yeah, strong bearish trend. Okay, like Saiful Bahrain says, strong bearish trend if the price stays below the cloud. All right. If it goes above the cloud, then your analysis will be different already. Yeah. Okay. So now keep your questions coming. If you have questions, I'm going to go on because I'm going to go and interpret. I'm going to go look at a few more examples. Okay. So now let's go back to our moving average case study earlier. If you still remember, right, guys, we have this whipsaw problem over here using the moving average. So I'm just basically going to show you how can the Ichimoku indicator overcome this problem. All right. So I'm going to use the same chart, but this time I'm going to put the Ichimoku chart over here. All right. I'm going to put the Ichimoku indicator over here. So if you look at this particular trend, okay, it's the same chart it's the same chart like this, right? It's only now I am applying the Ichimoku indicator. Okay. How would you interpret this movement, okay, using the Ichimoku indicator? Okay, what does a color means? Because you remember the cloud is made up of the area between the two lines, right? One is span A and span B. Okay, one is a shorter term average, is the average between the standard and turning line is shorter, and the other one is a 52-day average, which is a longer term one. All right. So if span A, the shorter term one, if span A is above span B, the 52-day average, then it's green. All right. If the span A is below span B, then it's red. Okay. But in this case, it does not really matter, right? But what we want is that momentum between the two lines, whether it's expanding or not. That's more important. All right. So the color is not really that important. Yeah. So if you notice, okay, the moment the cloud gets thinner is when the price starts to pull back, right? Even if you look at this red area over here, right? The price is above the cloud, and you can see the cloud is expanding, and you can see very strong bullish movement, right? But the moment the cloud starts to get thinner, okay, I hope you can see my arrow that I point, right? When the moment it gets thinner, you see the price starts to pull back. And when it crosses, that means very thin point. The very thin point, the thinness is when, of course, the two lines crosses, right? The cloud. That's where you see it. That's where the price, starts to rebound. All right. And remember, this line is being plotted ahead, right? Like same thing over here. So how do you interpret this? Price is in an uptrend. That is the most simple one, right? Because it's above the cloud. But what would you think you'd be expecting by looking at the cloud? What would you? Strong bullish, but cloud getting thinner. Centric is saying, right? Strong bullish, but cloud getting thinner and price line might get into the cloud. It might, all right? But if the cloud is getting thinner, what does it mean? Michael Ching, some chartists say moving average 20 is above moving average 50 buy. That chartist is a, if someone says using crossovers to buy and sell, he's just a beginner, lah. All right, we are going way forward, right? No, you can do a back test and you try 20 and 50, whether you can buy or sell, right? You will not get a very good probability, lah. Yeah, Ken says momentum is not strong, means it's weak, lah. Not strong means weak, right? Okay, so now, if the momentum is weak, what would you be expecting the price to do? Are you going to expect the price to go very strong upwards? Are you expecting the price to go very strong upwards? Or like Santik said, it may go into the cloud, but I do not know yet, right? Until it goes into the cloud, right? Okay. So if the trend is weak, okay, the possibility of price, it may go higher, it may go a little bit more higher, but I don't expect the price to go very high upwards, right? It may just go sideways, okay, like what Leong is saying. It may just go sideways, or it may even just go below the cloud and turn bearish, okay? But what it tells me here is that, wow, if I look at the price trend, is bullish, is going up, But do you think I'll make a decision to actually buy this stock right now at this moment? Okay, let's say I'm using other tools and should I buy? Should I buy at this current price? What do you think? Or should I just wait lah? Because I'm expecting the trend to be weak. Okay, Ken says no. No. All right. So right now, if the price continues to stay above the cloud, although it's bullish, but I do not expect the price to turn really strongly bullish, right? Okay, so here. So now, if I were to, let's say, look at this particular stock, and let's say you get the news somewhere, or someone asks you to buy, or you look at reports or whatever. Oh, good time to buy lah because it's going upwards, right? But when I look at this indicator, when I look at this chart, I'll tell myself, no, I think I better stay out first. Why? Because the market tells me, I'm basically, again, it's all about understanding the market behavior, right? The market tells me otherwise, right? It tells me that yes, the price is still trending upwards, but I see resistance getting stronger, so I better wait. All right. So let's take a look at what happened over here. Okay, so the interpretation is basically a weak bullish trend, but the price is still bullish as long as it stays above the cloud. But I'm just not expecting the trend to be strongly upwards yet. Okay, if the cloud is expanding, that's fine. Okay. So here what happens. So this is where the circle that we see here. That's where we look at the chart, and you can see the price actually went sideways and go into the cloud. Right, it's not getting higher, it's just going into the cloud, and the cloud continues to get thinner and thinner and thinner and thinner. All right, and at one point of time, it went below the cloud. Okay, it went below the cloud, and of course, if it's below the cloud, we can't do anything, right? Because the price may trend downwards. But even if it goes below the cloud, let's see, when the moment it goes below the cloud, you can see that the cloud remains thin. So so although the price is below the cloud, I do not expect a very strong downtrend because the downtrend is weak, right? And here shows that the price actually did not go down very aggressively. It continues to just stay sideways, right? Now, then it starts to go above the moving average. It starts to go above the cloud again. All right, it starts to go above the cloud again. Okay, telling me that the bearish trend is turning bullish. Okay, so the next question is, by looking at this movement of the cloud, what will I be expecting? Will I be expecting a price to continue trending upward strongly or go down? Now, this is where we make the decision now, right? So what do you think? And this is the same chart that we look at here, right? Because when we look at the moving average, I do not know, because here, if I buy, I can't really see. I don't have any guidance of whether the trend is weak or strong, right? At this point of time. But now with the cloud, is the same point at this point here with the cloud. Will I be able to make a better decision? What do you guys think? Wait for it to hit support. Okay. Depending on where your support is, right, Jason? If your support is below the cloud, that means it's already bearish. Okay. Or maybe you want to wait for it to go near the cloud. Okay, but we are not going to the precise entry and exits lah. Okay, what we want to know is basically whether this trend, okay, based on this indicator currently, can it continue to go upwards? Going up but sideways up, the cloud not strong trend. Okay, fair enough, because this is a thin cloud, right? So if you look at the current price, and the cloud is actually still very thin. Okay, weak bullish, yes, correct. That's the correct interpretation because it is on a very thin cloud. So it's a weak bullish trend, right? Sideways trend, that's what we can say. Leong Sun says, seems starting to have a bullish momentum. Michelle says sideways. Anyone else want to try? Buy, probably. Okay. So let me interpret this. So Leong Sun, okay, you got almost I mean, you have that idea right now, because you see that cloud is getting thinner, right? Maybe the next 15, 20, 15 days or whatsoever is getting thinner. But if you look at the edge, the end of the chart, you can see that line is starting to expand, isn't it? All right. I mean, it's not going sideways like forever. It's starting to expand. Okay, so what does it mean? That, possibly in the future that trend may be strong. All right, that trend may be strong, but there's a criteria, right? The trend may be strong upwards as long as the price stays above the cloud. Because if it goes below the cloud, that means it has turned bearish. Okay. So if I want to do a trading plan right now, very simple. I can, let's say, buy now, right? And I'm expecting the price to go, maybe not now, maybe in the future, maybe in the next few days, it's going to be stronger upwards. Okay. As long as it stays above the cloud. So if let's say I want to buy this particular stock, I can easily put a stop loss below the cloud. Okay. Because I'm only expecting the price to become strongly bullish if it stays above the cloud. But if it goes below the cloud, that means it's not going anywhere. So I can easily put the stop loss, if I'm trading, okay, put the stop loss below the cloud. Okay, yeah, something. So you can see that the edge of the cloud is getting thicker, because we want to see, that's where the most important part of this indicator, right, is plotted ahead. Right? It's plotted ahead. You can nibble a bit. Okay, that one I don't want to go into it. You need to know, you have your own trading plan on how to use it, but we basically can you use this tool to actually add to add to your whatever trading plan or strategy that you have lah. All right. So let's take a look at what happened here. Right? So price is bullish. The current trend is weak, but the price trend is strengthening moving forward. So as long as it stays above the cloud. Okay, that's my interpretation. Okay, the most important key word here is here, because the cloud is expanding upwards, right, towards the future, only if the price stays above the cloud. Okay. So if you look at this part here, the price continues to climb higher, and again, the price can climb higher as long as the cloud gets higher. Then if the clouds continue to get higher, then we're going to expect the trend to continue. But again, as time passes, this cloud will continue to be plotted forward, right? So at one point of time, that uptrend can also become thinner. That is the future lah. All right. So here it stays above the cloud, and you are able to ride on the trend because it already gives you an indication here. This is the forecasting part, right? It already tells you that, you know what, that trend is getting stronger towards the future. So either you want to take action or not, it's up to you. All right. But you also need to look at the downside. And the downside is basically what? If the price goes below the cloud, no more deal. All right. It has to stay above the cloud. And then this will be continue expanding. All right. Any more questions? And this is basically what I have to share with you guys. Okay. It's 9:25 right now. We probably have 5 more minutes if you want to basically try to use this on a current stock counter, any counter that you want to look at. All right. And then we try to work together with this. Okay. Now that you get the basics, the foundation of how to use it, now how are you going to apply current price data? All right. I'm not going to say anything. I'm going to basically give you guys an opportunity to answer. But first of all, what stocks that you want to look at? All right. If I get you guys commenting 2 or 3 or more stocks, the same stocks, then we're going to take a look at the stock, right? If it's only 1, then I still have to wait until there's 2 stocks. We already have Top Glove. So if anyone else type Top Glove, then we're going to take a look at Top Glove. We have Focus SP, we have Power Root. Anyone? DNX Solution. Anyone else? If you have, if you have 2 person putting the same counter, we're going to take a look at the counter. Okay, so Top Glove. Top Glove. So Top Glove it is. All right. Now you can apply this on any other counters, lah, right? You just have to basically continue to practice. All right. So let's share my screen. Hold on. I'm just gonna put in. Let me just prepare the chart first. Like I said, you can actually get this chart on e-invest on Afin. Hold on, Okay, so top glove on either e-invest, but I'm going to use an example on TradingView. And of course, for users of Equities Tracker, this is also available on our on equitiestracker.com lah. All right. So let me share. Okay, I want you guys to do the analysis, not me. Yeah. Okay, so let's take a look at Top Glove. Okay, this is how Top Glove currently look like. Hold on, yeah. Okay. Anyone want to try? How would you interpret this? Anyone want to try? Yeah, Daniel, can this indicator be applied on all stocks and no matter blue chip or stocks below RM1? Yes, you can. Oh, sorry, I didn't share my screen now. It's up right now. Yeah, generally you can, okay, but you do not want to apply. You can apply basically not just the Ichimoku indicator. In fact, any indicator, right? When you want to apply it on a particular stock, the first thing that you need to have is volume. All right, you need the chart to be alive. I do not want to have you can't, you will not get very good accuracy if the stock does not have consistent volume. Like, today only maybe 10 lots done, and then tomorrow maybe 100 lots done, and then the next day 10 lots done, right? Very low volume because it does not represent the real market. All right, when we have more volume, better, because that's where we have different players, and you have many different kind of players. The volume is big, so it basically represents the real market. All right, so volume is very important, right? So some stocks, like, you have RM1 stock, but if those stocks are very active, then you can, right? But if you have stocks that is not active, then you may want to you may not be able to use even a technical indicator because you will not get enough accuracy, right? So just bear that in mind. Okay, so now you can see Top Glove, right? Are you able to see? How would you see this now? Looks downtrend. Current price is below the cloud. The cloud is thin and not a strong downtrend. Okay, very good. Okay. So if you try to go back even like previously on Top Glove, you can see, right, when the price goes below the cloud and the cloud gets thinner, getting stronger downwards, or you can see the red area over here, right? It's strong. Okay. But you can see that it's starting to get thinner right now. Okay, which is which basically tells me what, right? Although the price is in a downtrend, but you probably have support coming in, right? People are starting to buy a little bit. Okay, but nevertheless, it's still a downtrend. So like Michael Chen says downtrend, Suntec says downtrend. Yes, it is in a downtrend, but the cloud is not as thick as before. Can you see that? Okay. Yeah. So you look at the edge, right? So that means what? You see, you look at the current at the end, right? It's turning red, right? It's going downwards, turning red. Meaning that if the price, so you have to look at the period, like probably the next 20 days, right? In the next 2 weeks, if the price cannot go above the cloud, then we will be expecting further decline, a continuation of a downtrend, right? If the price cannot go above the cloud, and if you look at the cloud, okay, the above the cloud means it has to go above 545. That's the top part of the cloud. It's RM5.45. Okay, so if it struggles to break above 545, okay, in the next, let's say 20 days, then we're going to expect stronger downtrend. Even the trend can even be strong right now because moving forward is really down, as long as it stays below the cloud. So if you look at this would be, although sometimes we want to try to catch the bottom, right? We try to catch the bottom, and this is where we can also look at combining, let's say, fundamentals or technicals. Although the company fundamentals, yes, it's strong, this company is still going to make tons of money, at least in the next one more year, right? Because their orders is like one fully until next 1 year, or even 1.5 to 2 years, right? They're going to make a lot of money, but moving forward, we do not know, right? So if you look at this, it is currently quite strong, but downtrend. Okay, so the only way for this price to turn upwards, if I want to be sure, at least I want to be more sure, to, let's say, buy this particular stock, if I want to not go against the trend, I would at least want the price to go above the cloud. All right, if it goes above the cloud, then I get a confidence that, it's turning bullish right now. Okay, and when the price breaks above the cloud, because it's going to take some time before the price goes above 545, right? It's not going to be tomorrow. It's not going to be next 2 or 3 days, right? It's going to take some time. It probably take 1 or 2 weeks if it goes up. And after 2 weeks, if let's say the price goes above the cloud, then you can see the change in this the cloud again. Okay, because at that point of time, maybe after 2 weeks, the cloud may change direction. So you make the interpretation when the time comes. All right. Yeah, 450 seems to be support line. Yes, so like I said, whether it's 450 or 460 or 470, as long as it stays above the cloud in the next 2 weeks or 3 weeks, right, 15 days, if it cannot break above the cloud, then we're probably going to see a bigger movement downwards. Daniel, you need to know how to apply it, right? Technical analysis can be used both for, trading, and mostly people use charts for trading most of the time. All right, very less fundamentals, very less investment, because investment it's supposed to be long term. All right, so we basically use very simple tools in technical analysis for your investment portfolio. All right, maybe just to adjust your prices to buy and sell a little bit, but in the long run, you will still use fundamentals for long-term investments. Yeah, so May it went up, right? So if you look at May, let me just look at here, right? Okay, so you look at before this, it was below the cloud, and the cloud was expanding upwards. Now this is where the price breaks out, right? The price breaks out, and we're expecting actually the price to actually go higher, right? Because you'll be able to see the cloud moving forward. Let me see. I just put in there's a tool here where you can actually do a date range. Okay, the moment the price breaks out and 26 days later. Okay, just let me plot this one here. I want to put 26 days later, right? $24, $25, $26. So yeah. So when the price breaks out, like you said, on May itself, the price breaks out. Here is where the cloud actually move forward, right? It's getting thinner and it's changing direction. And here the price, of course, is currently here. You don't see the price here at this part here on the right, on the area. Okay, the blue area that I colored. You don't see the price, but you can see the cloud, right? So the price actually went above the cloud, and that point of time, you see the cloud is actually still bearish. Okay, but the cloud is still going downwards and is expanding downwards. That means if the price is above the cloud, we are expecting actually a strong bullish trend. Right? We are actually expecting a strong bullish trend over here. Okay, when the price goes, let's say, above 570 lah. Okay, but what happened was the price was not able to go higher, and suddenly it just went below the cloud. Okay, so what should you do here, right? If I, let's say, bought Top Glove at 5 ringgit and 70 cents, let's say if I buy at 570 cents, okay, if I'm going to buy, I'm going to expect the price to continue its bullish trend, to continue going higher. I'm expecting that if the price stays above the cloud. All right, but if the price goes below the cloud, then what should you do? Should I continue to hold it and hoping that it's going to go up, or should I just cut my losses? That's a question, isn't it? All right. So of course here is where for any indicator, that's why when I started this whole thing, I told you that there's no foolproof, there's no 100% that it's going to work, right? But if it does not work, you should know what to do. All right, you should know what to do. Like here, for example, if the price goes below the cloud, let's say you buy around 560 or 570. Now, if it goes, let's say now here it goes below the cloud, right? When it goes below 510, it goes below the cloud. So the question is this: I bought at 570 and now at 510 it's below the cloud. What should I do? Should I hold or should I sell? Okay, we always have this dilemma, isn't it? You'll be thinking, oh, this is a good counter, maybe I can hold longer term, right? So I'm just going to bring this forward because that's when we make our decision. That's when the price go below the cloud, right? At 510. Okay, the moment it goes below 510, that's when the price below the cloud. So if I buy at 570, for example, and go 510, if I'm going to sell now, I'm going to lose 60 cents. All right. And we always have this fear of, if I sell now, if the price go back to 560, it makes me look like an idiot, right? Okay, that happens, right? But if I were to look at this, again, this particular chart, and you can see that the trend is weak, yes, okay, but it's below the cloud. I'm expecting the price to be in a downtrend. Okay, and if you move forward, you can see right now it's even more dangerous because the cloud is getting thicker, right? So if I was to sell at 510, then at least I will not be holding the stock, which is now trading at around 4. Today is 466. All right, so it's very important, not just just fully rely on the indicator, but you need to have a trading plan. Oh yes, you have to. The cloud is just an indicative tool. Like I said, you can use it as an additional tool to whatever setup that you have. All right, it's always important to have a setup, right? So now that you know how to use the, you can't just use this indicator as it is, right? Because you also need to know what would the correct price that you want to buy and what other tools that you're going to use to get in your buy and also to exit, right? Okay, so remember the cloud indicator. Okay, the reason why we want to use the cloud indicator is only two things that we want to know, right? Number one, whether the trend is up or down. That's the most important, easiest one. Number two is whether the trend is going to continue going upwards or not. Okay, so no matter what strategy that you're applying, let's say you are in a buy position, right? You are in long position, and you see that the cloud is getting thinner and it's an uptrend. And if I'm buying, then I have that confidence that it can go higher. So I'll just keep on holding, right? But if let's say I use other plans or whatsoever, and I'm buying this stock, right now I'm holding this stock. Okay, my trading plan says I will not sell until the price go to a certain level or whatever, right? But now the cloud tells me, you know what, it's getting weaker now, so I have to take action, right? Whether should I sell some first, even before the price doesn't reach my target, or should I just wait until the price goes below the cloud? All right. So there are many ways to use this, right? But again, this is just if you really want to go into trading plans, you have to go dive deeper and also look at other indicators to come out with your setup, your buy and sell, right? This is just I use the Ichimoku indicator as a guide, right? A guide to solidify or to strengthen my buy and sell decisions. That's all. All right. Okay, so this is where you can download the slides for tonight. Okay, you have to go to our colleague will basically just type in the comment section. It will be pinned there. You can just click on the link. You have to answer a few questions. Then you will get an email. Once you have completed the questions, you'll get an email to show you where you can download the slides. All right. And if you want to know more about E-Invest by Afin Huang, all right, or you want to get information and you want to be part of them, you can always go to this link as well, bit.ly/Afin Huang June, all right, or just do a barcode scan here. It would direct you to the website. All right. Okay, so guys, I know it's already been 9:40. I didn't know it was so late. I'm always just excited to share. But thank you so much for joining me. Like I said, just continue to do more exercises, and of course, once you have this foundation, if you want to go further, you can always go to Google, read books and further strengthen your knowledge in using this indicator lah. All right, but as long as you follow the guide, it will give you an idea. Okay, but you just have to continuously do more practice and see what happens whenever you have this indication moving forward, right? Then you do your own testing and see whether it works or not for you. All right, so with that, thank you so much everybody for joining us tonight. I'm going to end this session, and also thank you once again to Afin Huang to be part of this session as well. And I wish everyone stay safe, stay at home. Hopefully we are able to flatten the curve, and in the meantime at home, continue to expand your knowledge in investing and trading. So good night everybody.